Hello traders, my name is Logan with Funding Talent. In today's video, we're going to be doing a live market forecast for you guys, and in this video, we're going to be covering the biggest fundamental drivers to be expecting in this upcoming week, and the best technical setups for you to keep your eye on so you can capitalize them in this week. So without any further delay, let's get right into the charts. So traders, by now, you know the drill. First, we're going to dive straight into our fundamental drivers and our news events for this upcoming week. As you can see, on Sunday, we're starting the week off with some Australian dollar news at 8:15 p.m. Eastern Standard Time. As always, all of these times are in Eastern Standard Time. Tuesday, we're coming up with some US dollar news at 8:30, core retail sales and regular retail sales. And then Wednesday, we're coming in with some Canadian dollar news at 8:30 a.m., US dollar news at 2 p.m., some news on the US dollar again at 2:30, 5:45 p.m., we're going to have some Kiwi news when the GDP report is released. Then 8:30, we're going to be following that up with some Australian dollar news. And on Thursday, we have some GBP news at 8 a.m. So pretty much the only day that you really should be worried about is Wednesday. So be sure to tighten stops, get out some trades if you need to, if you're intraday or scalping, and play it slow. Remember, news events can completely change up your trade, so let's take it slow and trade patiently. So this week definitely presented some mixed signals in terms of risk sentiment. Tech stocks did come back from their drop a little bit, but my mind is completely not sold on the fact that we could see further risk-off market sentiment. The central bank for the 19 European countries that use the single euro currency left its key interest rate steady, but it has said that it expects to purchase assets under its Pandemic Emergency Purchase Program, which is PEPP. During the next quarter, it will be conducted at significantly higher pace than during the first months of the year, based on an assessment of the financial conditions and the inflationary outlook in the European Union. Apart from this, including the reference to buying assets at a slightly higher pace in the second quarter of this year, as compared to the first quarter, as we just said, the statement from the ECB's Governing Council mirrored its statement in January, including that the purchasing of bonds will take place in a flexible manner across all asset classes and among jurisdictions to prevent a tightening of financial conditions. So pretty much they're going to be purchasing more assets, trying to pump more money into the economy and therefore stimulate it. The University of Michigan's consumer sentiment for the U.S. jumped to 83 in March of 2021, so this month, from 76.8 in February, which is beating the market forecast of 78.5. It is the highest reading since March of 2020 due to the growing number of vaccinations as well as the widely anticipated passage of Biden's relief measures. So pretty much all this means is consumers, people that are spending money, have a better outlook for the economy than they did a couple months prior. So something to be noted is that bull markets do not end on bad news. And I do not see much bad news happening these days. Vaccinations are happening at a rapid pace, virus counts are declining, and the economy is poised to surge. There's no reason the party should end here, right? So, for our risk sentiment of this week, as I said previously, it is mixed right now. News is saying risk on, but underlying issues still may present, which could lead us to further risk off market sentiment. So for this week, we're going to be anticipating a risk on market sentiment until we get a clear indication of otherwise, but we will keep an eye out always because we are ready to react to whatever happens. Steady increases finally, and in large increments. So we've seen the largest increase in the last week in both delivery and administration of COVID vaccinations. We saw a 22 million change since last week for delivered numbers and a 16 million change from last week for our administration numbers. This is fantastic and large increases in both areas. So, as I just said, risk on market sentiment for now. And just to elaborate on that, risk on market sentiment means expectations are higher for further economic growth, which means we can expect the Kiwi, the Canadian dollar, the Australian dollar, the euro, and the Great British pound to appreciate if things go according to plan. So, going into our technical analysis for this week, our take profit has been hit on the DXY chart. This is not really anything to say now about it, besides the fact that we did enter a retracement after our take profit was hit, but I wanted to give you guys an update from this trade that we announced for you last week. It seems like we could be entering a three-phase pullback before we start our first wave, which would mean that we take prices higher in the dollar. But it is also absolutely possible that we come lower after completing our last correction, which was when we hit our take profit. We completed our C wave, which is the end of that three-wave retracement. So for the DXY, we're going to be keeping our eye out until we get a clear indication of trend before we make an active trading decision. On to BTC USD. Sorry for the complicated counts, but as you can see, we entered a primary third wave, which we seem to be almost completing now, and an intermediary wave, which we've completed 1, 2, 3, 4. This is easily identifiable on lower time frames, but right now we are using the daily chart. I will drop down to the 4-hour chart for you guys, and you can see we did finish our 1, 2, 3, 4, completing our fourth wave, heading up to complete our fifth wave now, which would be around that 60,400 level, which would mean all-time highs for Bitcoin. This being said, I do think it is absolutely possible that we see a medium-term correction in cryptocurrencies, whether that be happening in the beginning of this week or at the end, or maybe it will take a week and a half to get there. But I do think that right now, as far as market conditions are concerned at this moment, it does seem that cryptocurrencies could come lower. And we'll be diving into some analysis for that in a little bit. But the main ones I'm going to keep my eye out on are Ethereum, Cardano, and possibly Polkadot. Those are some coins I'm keeping my eye on, and possibly you might be interested in doing the same. But I do see Bitcoin hitting an all-time high before and if we enter that retracement. So for right now, my bias is long on Bitcoin. Now going into our S&P analysis, you might say, Logan, this has been invalidated, but you would actually almost be correct, not completely correct. As you can see here, we did form a double top at this level of 3,950. And we are still divergent on the 4-hour, daily, and weekly charts, which we've been maintaining for quite a bit of time, as we discussed in the previous market forecasts. As you can see, this trade is working out very well before, unfortunately, because this was leading to some companies hurting badly. But when tech stocks rallied throughout the week, we did come back a little bit more. So I'm interested to see where we close today and moving into the next week. I really do hope that this analysis is invalidated and we can break for new highs in the S&P, but it is something to keep my eye out on, as it is an active trading decision that we did identify prior, and nothing has completely invalidated that decision yet. Moving into our silver analysis, we marked this out for you guys last week, and as you can see, we drew this support line out. We came back, retested it, and are now bouncing off of that support line. We are still divergent on the daily chart and the weekly, and I'm interested to see where prices will be heading, but my bias will remain short as we're looking to complete our C wave and possibly a flat correction around this A wave ending level. So, a lot of confusing words. Pretty much my bias remains short on silver. XAU USD, I still believe this is one of the best buying opportunities we have seen in a while. We've just retested the 61.8 retracement, touched the bottom bound of our downtrending support channel, and we are bouncing off of that level now, so I think it's a great buy. I personally see gold heading a lot higher, potentially breaking for new highs around this level. So my bias for the medium to long term will stay bullish on gold. NZD CAD, I hope you guys took this trade last week. So far, all of our trades except for the S&P analysis, which you actually could have made money on if you were actively trading at short, lower time frames, but NZD CAD does come in to correspond with the fantastic analysis that we had last week. If you took this trade, which I actually said to you guys I wasn't completely confident in, as you can see, it's been working out fantastic. We've been heading lower in the daily time frame, and we've continued to be heading lower. And my bias will continue to remain short on NZD Canadian dollar. Moving into Euro GBP, as you can see, we just finished a double bottom on the daily chart and the 4-hour. We are divergent on these levels, and we just broke strong with an engulfing candlestick that could take us higher. Interested to see what happens in the next couple of closes and the start of next week, but my bias will remain long on Euro Pound. Here's a little resistance line. As you can see, we did just break out, so it would make sense if this candle that's bearish right now retraces before coming higher. Moving into AUD JPY, our analysis from last week has not been invalidated, which we identified was an A, B, C correction, which means we would be heading lower in the medium term. As you can see, we've been continuing to head higher, but we've not invalidated that count. We're heading around 2 resistance levels on the weekly time frame. We formed a double top, and we are divergent on the 4-hour, daily, and weekly time frames. A lot of divergence in this last week on a lot of pairs, and as you'll see in our currency basket analysis, we're divergent on quite a bit of currencies. So it's interesting to see if the risk-off market sentiment that we were talking about prior will continue to shine, or start to shine at least, because of all these divergences in the currency pairs, which would show that we are heading into a risk-on market sentiment. But that divergence, if we get a reversal, will show that we will actually end up getting a risk-off market sentiment, which is exactly what we are predicting might happen. So my bias will continue to remain short on AUD Japanese yen. AUD Swiss franc, the same exact thing as last week. We identified this ABC correction, still did not invalidate it, so my bias will remain the same. Short on Australian dollar Swiss franc. And that would correspond with a risk-off market sentiment. AUD CAD, I hope you guys took this last week. We were around this level at the start of last week. And as you can see, we've been heading down in a very nice fashion, forming our 1, 2, 3, 4, completing our fifth wave almost, in our first wave in our deeper retracement, which means that we would be starting, if this wave count continues to prove valid, we would be starting a bearish trend on Australian dollar, Canadian dollar. So my bias will remain short in the short to medium term on this currency pair. Heading into GBP USD, we actually identified this for you guys about 2 weeks ago, and we're pretty much stationary, but my bias will remain short as we head lower to this retracement zone at the 38.2 to 61.8 retracements of this larger wave. Moving into Ethereum. So Bitcoin and Ethereum and the cryptocurrency market has been moving very fast, especially in this choppy FX market that we've been experiencing this last week. But as you can see, we've been heading in this uptrending channel, and to confirm our bearish trend, we will need to see a break of the lower support band of this channel. If we see a break and invalidation, then my bias will completely shift short. All we have to do is break this channel. But if we break this channel short, then my bias will remain short biased on Ethereum. So with all of our technical analysis out of the way, we're going to dive straight into our currency basket strength and weakness analysis. As you can see, we have some very mixed signals this week. I see the Japanese yen depreciating, the euro appreciating, the pound depreciating, as well as the Australian dollar. There's some indecision in the Kiwi and the United States dollar, and I see both the Swiss franc and the Canadian dollar appreciating. With all of this said, every single pair that has shown clear direction is divergent. That stands for the Japanese yen, the euro, the pound, the Swiss franc, the Australian dollar, and the Canadian dollar. The two indecisive pairs are not divergent, which is very interesting to see. Pretty much what this means is we're showing trend in these pairs, which could continue to follow through, but divergence is a very clear sign of a reversal. So if we get a reversal in all these pairs, that will actually correspond with our risk-off market sentiment. So I hope you guys are starting to grasp my hypothesis as to why I'm coming to a possibility of a reversal in the currency pairs and potentially indices as well when we enter a risk-off market sentiment. But as I said, this is completely speculative right now, besides for the fact that we're seeing some technical indicators. So for right now, we're going to follow a risk-on market sentiment and keep our eye out in case anything changes. So traders, that was this week's market forecast. We hope that you've taken some valuable insights so you can be careful looking at the fundamental drivers in this week and the best technical setups so you can capitalize them either in your trading system or on the setups alone that we demonstrated for you in this video. If you are not already subscribed and following to all of our social media platforms, we ask that you please do so because we release content every single day across all of our social media, and we will be releasing these videos every single Monday for you guys here on YouTube. So, on behalf of everyone at Funding Talent, as always, happy trading.